Alright, what's up guys? Happy Sunday. I hope you've had a good weekend. So let's jump into the prep here for the week of December 13th. So I'm coming to the realization I better get my ass in gear here and start doing some Christmas shopping. So hopefully you're a bit more prepared than I am. But we'll get jumping in. So take a look at the major indexes, the S&P 500, the QQQ, the small caps, and the Dow Jones. We'll take a look at a few of the major sectors. We'll talk about Apple and Microsoft, both of which, pretty much look like the only two stocks that big money is favoring right now. Then I'll share my watch list: Tesla, Roblox, AMD, NVDA, Google, Amazon. Then we'll finish it off here and run a couple of scans, and I'll have you on your way. Keep in mind this week, final Fed meeting of the year on Wednesday. So does Powell come in and F everything up? In terms of what I mean by that is we have good-looking structure right now. Some daily squeezes, some weekly squeezes. Think to the extent Powell doesn't come in and piss the market off, it's going to be good structure for a push into all-time highs. And then keep in mind monthly expiration this week. So, as always, there's a room for a little bit of that monthly expiration shenanigans, but could also make for some pretty good pin plays here. And then for those of you in my mastery, we'll be live on Thursday and Friday for some live trading. But we'll get jumping in. So we'll start with the indexes here. And like I mentioned on Friday, S&P QQQ did a good job of kind of getting back on their own 2 feet after the pullback to the 21 EMA, the weekly 21. So I'll just continue to pound the table on this. In an uptrend, typically not a good spot to start to load up on out-the-money puts. Shorting is going to get much easier when we break under the weekly 21. So we held support there, and now your daily chart has a pretty good picture. Back above 21, we have stacked EMAs, we have green 10x bars, we have a daily squeeze, and for the S&P here, you also have squeezes on your weekly, your 4-hour, your 2-hour, and your 30-minute. So you get that potential, you have that potential domino effect here, where if the 30-minute squeeze can fire, it could trigger the 2-hour. If the 2-hour fires, it could trigger the 4, could trigger the daily, could trigger the weekly. So you got a bunch of nested squeezes here, but in an uptrend, it's pretty good structure for a push back towards the upside. So let's check out that 4-hour squeeze. Maybe the market just traded sideways into the Fed. Maybe we just trade sideways into monthly expiration. In terms of the 4-hour squeeze here, it's going to be one to keep an eye on. So we have pretty much your level of your obvious level of resistance up here. So your market pulls back to the weekly 21, does a really good job of running back towards key resistance. But look at it this way. Resistance is probably going to be a brick wall. So if you start to run towards that brick wall from a mile away, by the time you reach it, you might be running out of steam. So I actually kind of like the fact that we didn't break out initially. Rather, you come in just a little bit, but now you're printing some good-looking squeezes. There's the 4-hour, the 2-hour, the 30-minute. Now the market kind of catches its breath and builds up energy here. Our next shot at trying to crack through resistance, we're going to have a full gas tank. Right? You're going to have all that energy that you built up here in the squeeze, as opposed to back here, by the time you're trying to break out, you've already made a pretty significant push. So those squeezes I think are going to be interesting here. Just remember that domino effect. The first one to go is going to be the 30, then the 2-hour, then the 4-hour, etc. But overall, I think the S&P 500 looks good. Bulls are in control above the weekly 21 EMA. So I'm looking for the daily squeeze here to fire to the upside over the next handful of weeks. In the Qs here is pretty much a mirror image. Great job of getting back above the daily 21 EMA. I'm getting a few of my buy signals here, which is a new indicator we're working on. The interesting thing is, strong market. Last time we got the buy signal was back here in April. So as strong as the market's been, hasn't been technically clean enough to generate the buy signal here based on what we're working on. But good structure back above the 21. The bulls are in control above the weekly 21 here. And we're printing a daily squeeze, a 4-hour squeeze, a 2-hour, a 60-minute, and a 30-minute. So here's how I'm seeing that. On this chart right here, I got weekly down to a 5-minute. If it's green, you got to squeeze. If it's white, no squeeze action. And then over here are the 10x bars. Weekly down to a 5-minute. So this is, it's not just, the market did a good job of kind of getting back on its own 2 feet. We also completely shifted momentum. We're back over here. You had red 10x bars on every time frame. So the squeezes here all over the place, I think most notably on the weekly chart. But again, you're going to work that concept of, hey, in an uptrend, 30-minute squeeze fires, it could trigger the 60, the 2-hour, the 4-hour, the daily. So pretty much, this is what I meant by, and not that I get too much into the Federal Reserve side of things. I don't really even pay attention to, exactly what it is they're communicating. The market's going to do a good job of showing me the real reaction. But in terms of, does Powell come in and F everything up next week? This is what I'm referring to. We have on the weekly charts, the daily charts, and now on a lot of lower time frames here, the pitch that I think we need for another push towards the upside. So the structure's there. We'll see if Uncle JP tries to shake the tree a bit here. But your Qs look good, weekly and daily stacked EMAs, green 10x bars. So I think your S&P 500 and your Qsters here looking pretty good. Now the problem child is the small caps, which is not the best looking chart. So nothing has changed there. So from a bigger picture perspective, we take it to a weekly chart. Admittedly, up to this point, it's more of the same. We're really the small caps here for the last, call it a year. For the last year, completely range bound between, that 2400, 2100 level. So, that hasn't quite changed. It's not a weekly chart I would want to get long. I don't want to do anything with the small caps here. I don't want to do anything. But keep in mind, this has been really range bound. Could continue to be. Obviously, at some point, one would like to imagine, at least I would, at some point in the future, the weekly squeeze is going to fire either which way, and then you got some freaking trend here. But just keep in mind, in the interim, it's kind of the same song and dance. But where your S&P and your QQQ, they kind of dust themselves off after the ass whooping and really do a good job of trying to rebuild the daily chart. Not so much here for the small caps. No stacked DMAs anywhere under the 21. And if we give this the momentum check, daily down to a 15-minute, you have red 10x bars. So the Qs, the S&P, they look bullish. Small caps, not so much. Could it continue to be the same, what is that, 300-point range chop fest? It could. Where I think the small caps do the market a lot of favors here is if they can simply stabilize. Our S&P, our QQQ, they're going to be back at all-time highs here without the small caps. However, the IWM does the market a lot of favors here if it can stop being the infection. So if you look at the S&P 500 as the body of the market, well, the Qs aren't causing any problems. If you look at the Dow here, the Dow looks pretty decent. The infection to the body of the market right now from an index point of view continues to be the small caps. So if they can at least stabilize here, it makes for a healthier overall market. And then we'll take it to the Dow Jones. The Dow has, let's see, you actually got a lot of squeezes here, so check this out. Weekly, 3-day, 4-hour, 2-hour, 30-minute. So you got some squeezes. And then if you look at momentum here, a little bit neutral, but a good improvement. So you kind of throw that into the same basket as the S&P and the QQQ. Maybe not as bullish as far as momentum goes. However, you rebuild the good-looking daily chart here. So there's your indexes. What do we know here? We know the two indexes that tend to matter most, the S&P and the QQQ. They got the pitch right now. The trend is here. The squeezes are here. Everything's lining up. So call it a Santa rally. Call it whatever you would like. I'm going to call it a market in an uptrend, squeezing on major time frames with positively stacked EMAs. In other words, it's a good bullish structure that could take you into brand new all-time highs. Until that changes, that's pretty much all I'm going to be concerned with right now, is trying to get positioned for the push into the end of December, the push into January. And I'm wrong under the weekly 21. So there's a look there at our indexes. Total squeeze fest. If we go sector to sector here, right, XLK looks pretty sharp. Stacked EMAs on the daily and the weekly. Green 10x bars. Get in my buy signal, daily squeeze, and let's see. Just a daily squeeze here, a couple lower time frame squeezes, and a lot of green 10x bars. So technology's got to go on the bullish list. Semiconductors, pretty straightforward. Weekly, daily stacked EMAs, weekly, daily green 10x bars, daily squeeze. I'm getting my buy signal here, and pretty decent momentum profile. You look for that 5-minute and then your 4-hour. You're looking for green 10x bars from top to bottom. You get bullish momentum to your lower time frames inside the daily squeeze. Better probability that squeeze fires to the upside. So the semis look bullish here. Communications continues to look pretty trash. I think Google rips to a brand new all-time high. If the communications have at least just put in the bottom here. And you can see the histogram is starting to shift. So selling pressure eases up a little bit of accumulation. Not the prettiest looking chart. So I wouldn't trade the communications. Potentially kind of use them as a gauge as to whether or not Google gets the ultimate green light here to start ripping towards the highs in 3100. Next up is the industrials. You get a weekly squeeze here. Decent looking daily chart, so that cleans up pretty good. But a pretty good looking weekly chart here. So the industrials are pretty solid. Next up is energy. A lot of squeezes here for energy. A lot of squeezes. 3-day down to a 30-minute. And the daily chart is shaping up here. Histogram is starting to shift. Let's check out that 3-day squeeze. Pretty good looking. So energy, it might not be the first spot I'm going to look to trade, but after we saw that volatility, this is what I'm looking for from different sectors. It's nice if SMH and the QQQ look great, but if energy and financials, industrials, if healthcare, if across the board, just kind of the market as a whole, can start to rebuild, some better looking daily charts, start to get some more green 10x bars, it just gives the S&P and the QQQ better odds of firing their squeezes to the upside. So big improvement here for energy. Next up is the financials. Not the cleanest daily chart just yet. It's a work in progress. Weekly chart, on the other hand, there's a 2-hour. The weekly chart, on the other hand, this does shape up pretty good. So some Goldman Sachs, some financials into the end of the year. Based on that weekly chart, that might not be a bad idea. And it's a squeeze fest. Weekly down to a 15-minute. So she's gearing up to make a move. The question is which direction? Well, then if you start to look at the 10x bars, right now they're all kind of neutral. So if these start to flip to green, then you got a pretty good chance that that daily squeeze fires to the upside. And then the weekly. So big improvement here for the financials. Let's take a look at healthcare. Very much the same thing. Good looking daily chart. Good looking weekly chart. So we can go through the rest of the list here. As a general statement though, we had a little bit of volatility there in the market. We pulled back to the weekly 21 EMA. We have since found support. Daily charts have cleaned themselves up, dusted themselves off a little bit. Everything looks pretty solid here. We got to get through this week with the final Fed meeting of the year. We've got to get through monthly expiration. But in terms of structure, it's all shaping up here for another push into brand new all-time highs. When that happens, that's to be determined. And under the weekly 21 is where the likelihood of that move happening starts to get, the likelihood starts to decrease under the weekly 21. But there's a look at the indexes, there's a look at the sectors. So I think generally speaking here, everything's starting to shape up much better than it was, just a couple of weeks ago as we're pulling back. So everything generally looking pretty sharp. But then in terms of the individual stocks, it's the Apple and the Microsoft show. So keep in mind, QQQ looks good. It's mainly because Apple and Microsoft are just ripping face here. Amazon, on the other hand, it's a bit more choppy. Google, though I like Google here, a little bit more choppy. But with Apple at this point, most bullish stock in the market, we had the pleasure of taking it from about 150 into 170. I think it continues to trade higher. It's just at this point, it's a little bit too extended. I'll take it on the next pullback of the AEMA, or you can day trade your next 15-minute, 30-minute squeeze. But here's how strong Apple is. You have green 10x bars on literally every time frame, monthly down to a 5-minute. You also don't have a squeeze anywhere. So Apple's pushing on so much momentum here, it won't even take a break, not even on a 5-minute chart. So for day trades, you wait for your next 5-minute, 15-minute, 30-minute squeeze. For the swing traders, that was an easy trade. So if you're in the master, you took advantage of that. If you're watching the videos here, hopefully you took advantage of that. But we ain't going to chase it up here at 180. I think it goes higher, but that's not a good swing trading entry. So Apple, they kind of squeeze all the shorts over there. Maybe it was a gamma squeeze. I call it a big-ass move. I think Microsoft is the next one here, gearing up for a big-ass move, a BAM. Great trend, daily squeeze, weekly, daily stacked DMAs, green 10x bars. And you give it the good momentum check here. Green 10x bars everywhere. So I think gearing up for a push here into brand new all-time highs. What's interesting about this coming week is, again, monthly expiration. There might be the potential for some of that pinning action. So if you look at Microsoft, one potential play here for this week. And mind you, I think it's a great trade here for January expiration trades. So you could swing trade it. That's pretty straightforward. For this week, though, you might look for that pin into 350. If you look at the open interest here, 40,000. You got some huge volume. So it's monthly expiration, big sexy number, a lot of volume sitting there, and it's just about a 2% move and change. Very doable. So a few different things that could work here for a pin into 350. Higher probability you could do a 340, 335 credit spread. Which for a weekly income trade there, pretty good stuff. You could bump it up a little bit more, 345, 340. Here you're going to get about a 2-to-1 risk-reward ratio. Or you could just simply go 350 short put, 345, looking for those $8.50 puts to start to get closer towards $1 into expiration if we're going to trade near 350. And that offers about a 1 to 2 risk-reward ratio. So I do like that. And what's nice about that trade is if Microsoft just goes berserk this week and explodes, if you're trading above 350 or if you're just trading above whatever short strike you sold, you're in good shape. Now the other alternative here is a butterfly at 350. Now these offer, in terms of risk reward, definitely a little bit more attractive. You pick that up for say 80 cents. So a big time risk reward. You risk $800 to make $4,200 on 10 contracts. These can be nice here. Obviously, in a perfect world for that trade, you're going to close Friday, right around 350. You're going to pin right around 350. So crazy risk reward, of course, gets a little bit tricky here if Microsoft, rips to 355, 360. So there's two different ways it could play it. I think for me, probably just go with the 350 short put. If they're going to pin the stock this week, I think 350 makes a lot of sense. Or the daily squeeze just goes to, to the moon, as they say. And you're in good shape either way. But keep in mind, for that, January expiration trade, you get a little bit of a dip here. I think it's a great setup. But as of right now, it's Apple, it's Microsoft. very much more so Apple. Maybe Microsoft is up next. But then if you look at a few more tech names here, Google, I think Google's going to get a shot here pretty soon. Weekly, 3-day, daily, 60-minute, 30-minute, 15-minute squeezes. So I think the idea of getting long Google for January, February, maybe even March expiration, get in a little bit early. I think the big triple squeeze here takes you into brand new all-time highs. And with the weekly squeezes, I'm looking for about 3 ATR. So call it 3,200. So Google is shaping up nicely. It's not getting the same love as Apple and Microsoft yet. But so long as you continue to print squeezes everywhere, it could have its turn next. And then with Amazon, we're still holding on to January expiration put credit spreads here. And while I continue to like the weekly chart, which at some point, unless this breaks down, I look for this to get us into 4,000 plus. Then you have the monthly squeeze. So as long as they continue to have a good structure, they are building the energy needed for that explosive move. But in the short term, I want to see a couple closes back above the 21 EMA. On the daily chart, I need to stack the EMAs. And then if the histogram can start to shift, and then if we can get a few more green 10x bars, I'll show you what it's currently looking like. When you see the green 10x bars hit the 30-minute, the 60-minute, the 2, the 4, the daily, then she's gearing up. So I still like the idea of January, February expiration credit spreads here. Keep in mind you got earnings coming up. But the structure is still good on that weekly chart. I'm still holding on tight here. I'd rather sit through a chop fest and take the easy profits into the strength versus try to chase it up here. So we're holding on tight to Amazon. Another name I wanted to cover here is Roblox. So I think another good candidate into the end of the year and into January. Big push over here, so $70 into about 140. So just about doubles. If a trend is really underway here, it should hold up. So we have January and February expiration spreads on this one. Stacked EMAs on the weekly, the daily, green 10x bars on the weekly, the daily. And I think that 4-hour squeeze, as long as it holds structure above the 50 down here, which also lines up with the weekly 21, gearing up for a push into all-time highs. We're looking for about 150. And we got a few different spreads here, so got a little bit in the options room. So let's see, in the options room we have got January 21st expiration, 110, 105 spreads. Also, grab some 100 by 95, and then in my mastery, 105, 100. Get some juicy ass premium on that one. Juicy. So Roblox is gearing up here, and then don't lose sight of the semiconductors. In my opinion, at least as of right now, if the market does rally into the end of the year, the semis, just based on the trend and structure, should be a pretty big part of that. And you got your buy signal here, you got the green lights. So buy signals and green lights in a squeeze, I'm interested. I think AMD is going to be a good candidate here. Momentum is a little bit sloppy. So we did pick up some of this last week. A little bit sloppy, so I think it's in perfect shape here if it holds a daily 50. It gets back above the 21, momentum shifts, very much like Amazon. I'll look to add a little bit more exposure there, and then you have NVIDIA. Good looking daily squeeze there as well. Those are the spots I wanted to cover here today, guys. Big picture thinking though. Your S&P 500 and your QQQ have daily, weekly squeezes. So do your semiconductors, your healthcare sector, the financials, the energies, the industrials. Mama market herself here is squeezing all over the place. So we'll get through monthly expiration, we'll get through Fed, see if anything changes. Assuming nothing changes, I think the high probability trade here over the next 4 to 8 weeks is going to be to the upside. But hey, that's just how I'm looking at things. I'll be the first to say, looking like I'm dead wrong here. However, as the dust has kind of settled here, and everything kind of simmers down, just a good reminder for future reference, typically not a great idea to buy puts on the market or buy puts on Google when you're pulling back into weekly support. A few of you were commenting on the videos. in all caps, mind you, that you were shorting everything I was long. I think one of you mentioned on this Friday right here that you loaded up on Google puts. So my condolences to that money. Moving forward, I think as a swing trader, you got to give a little bit more respect to the weekly trend, and not what the talking heads on Reddit and CNBC are telling you. Structure over everything. I hope you find that helpful. I say all this in good fun. Talk to you in the next one.